With its economy buckling under the weight of sanctions, Russia is fighting fire with fire. Moscow is threatening to withhold one of its biggest exports, natural gas, from its most reliable customer, the European Union. That's in response to discussions among officials in Washington and European capitals on the possibility of banning Russian energy shipments.
No decision has been made at this point by the president about a ban on importing oil from Russia, and those discussions are ongoing internally and also with our counterparts and partners in Europe and around the world.
The U.S. gets just 3% of its crude and 8% of its other petroleum products from Russia. The implications of a ban are larger for Europe, which relies on the Eastern giant for 45% of its natural gas. Europe's largest economy, Germany, gets more than 50% of its supply from companies like Gazprom. But smaller countries like Estonia, Finland, and Moldova are even more vulnerable, relying on Russia to meet all their gas needs. Austria, Poland, and Slovenia are in a similar situation because their share is also large at around 80%. European leaders are now working on a potential roadmap to wean the continent off Russian fossil fuels. That would starve Moscow of the income that it uses to pay for the bullets and bombs being fired at Ukrainian cities.
We have to get rid of the dependency of Russian gas, oil, and coal. I know the two of us agree on this.
Italy is committed to a quick reduction in our dependence on Russian gas. On Saturday, I spoke with the Emir Al Thani of Qatar, with whom I discussed in particular how to strengthen energy cooperation between our countries.
Amid the economic standoff, the prices of gas and crude, another major Russian export, have soared to their highest in years. And unless the fighting stops, the burden on consumers will only get heavier. Paolo Montecillo, TRT World.
For more on this, joining us now from Paris is Neil Atkinson, independent analyst. Neil, many thanks for being with us today. First of all, so Russia threatening to cut gas flows to Europe via Nord Stream 1. What would this mean for the energy markets, for oil prices, but especially for gas prices in Europe?
Oh, it would be an incredibly disruptive and dangerous move to be made by the Russians. Obviously, they would cut off their own source of income, but more immediately, as far as European consumers are concerned, it would lead to a disastrous spike in prices for both oil and gas. We've already seen that natural gas prices in Europe have increased 20-fold over the last, compared to a year or so ago. We've already seen oil prices spike to close to $140 a barrel in trading this week. So were there to be an interruption by the Russians, imposed by the Russians themselves, or a decision taken by Europe in conjunction with the US to cut off imports, there is no easy way that a cut-off on this scale could be absorbed by the European economies without great pain.
Right, Neil, it's very difficult to make any sort of prediction when it comes to prices, but I mean, what are we talking about Brent and WTI? We've seen Brent touching $139 a barrel a few hours ago, actually, yesterday at some point. How much could these prices grow? Are we talking $150, $160 a barrel or more?
Well, I'm very reluctant to start playing at sort of fantasy pricing forecasting. There have been price estimates in the press, at least, by some Wall Street analysts of $300, or at least that was, I think, something the Russian energy minister said. At the moment, the supplies are continuing. There's no doubt about that. But the current price levels, the elevated $139 a barrel you talked about, that represents anxiety about a future cutoff in supply. And it also reflects the fact that Russian oil exports in particular are already falling because many oil companies and many traders are reluctant to commit themselves to buying Russian supplies because they're unsure whether they continue to access trade finance. and they're unsure whether they will be left perhaps with a cargo that they can't sell to somebody else. Right. So to some extent, we're already seeing a fallback in Russian oil supplies reflected in the price.
Right. Interesting. Neil, one last question about other commodities, because we are also seeing metals, grains, other commodities spiking. Which commodity group do you think has the potential to be most stagflationary, and that is to impact more on inflation and negatively on GDP?
Well, I would have thought that, well, it's hard to choose between them, but I would have thought that a significant cutback in the supply of wheat, which is obviously a staple commodity in terms of food production, that would have pretty disastrous implications for food costs for not just Europe, but the rest of the world, which would feed directly into higher cost for household budgets at a time when they're also, of course, facing higher fuel costs. So I think that wheat in particular is something we need to keep a very, very close eye on. But on the other hand, frankly, anything which is produced in large quantities for global markets by Russia and Ukraine is going to present inflationary problems as we move into the next few months.
Neil Atkinson, many thanks for this analysis.